From what I'm seeing, Jimmy, your voice is coming through, but your face is frozen, which it's not frozen in a good position. You look like sleepy and drug out.
Shit.
But hopefully it's in the podcast like that. That would be great for everybody. Oh, you are choppy, buddy. Are you hardwired in yet or not? Are you still Wi-Fi? And he's gone.
That's an even better look right there.
Welcome back to the Futures Edge. I'm Jim Uriel, and as always, my co-host and the brains of the operation, Bob Ichino. And the first Friday of every month, as you guys know, which I actually find to be one of the more valuable episodes, is Mike Arnold, and we do just technical analysis. Because it was unemployment today, as many of the first Fridays of the month are, we spent a couple minutes talking about the fundamentals, because obviously it's a big deal and a lot of things shifted today. And then we're going to get to Mike, who is the chief strategist and co-founding partner of Path Trading Partners. Correct? Did I give you the right intro, Michael?
That intro works for me. Thank you.
Okay, good. Yeah, all right, good. So, Bobby, we saw these numbers today, and at first the market loved it. The equity markets I'm talking about.
Yes.
They thought, okay, slowing down a little bit, but not a lot. The wage portion of it wasn't particularly high. Things turned around late in the day. I still think the real story is the market likes it, but that late day weakness hopefully was the beginning of a 3-day weekend, possibly was just they liked it, but not enough to knock us out of this bear market. And realistically, you sell toward late in the day. What are your thoughts?
Well, I mean, if you mean not knock us out of this bear market by meaning get us to new all-time highs, there was very little chance.
Well,
of
that's
that.
okay. But yes, you and I have had this discussion, and you contend that we are in a bear market until we make new all-time highs, which is fine. But it's more valuable to know when at the bottom we are going to take out those highs. You'd give me that, correct?
Maybe. I don't think it's important to know when the bottom is, because I don't think you can know when the bottom is. I think it's more important to have a really good idea of when the bottom might not be. But if you miss the bottom, okay, let's say it bottoms, goes up 20, 25%, you could always take a larger position size and take a smaller portion of the move. You know, you can buy one lot at the very bottom and keep trying to buy it. Good luck with that. I've said this before. In 29 years, I bought the low and sold the high 4 times in 29 years. I remember every one of them, because it just doesn't happen.
Just doesn't happen, right?
One of the things I've always said is, like, I want to take a portion of a move and I want to leverage properly within that portion and manage my risk. And the reason, it's just like walking out of a restaurant, man. You take your doggy bag. You don't go to every single doggy bag and take all of their doggy bags. I want my trade. I don't want somebody else's trade. Having said that, Mike and I do live streams on the Path Trading Partners YouTube channel, which if you're watching this on YouTube, you're on that channel right now. We do live streams. Mike does a lot more, 2, 3 a day, sometimes 4. I'm on twice to maybe 3 times a week. We both said this morning, again, we're recording on Friday, after the number came out, I was pretty emphatic about it. I did not think the rally would hold. I'm giving myself credit, but it is on YouTube, so you can go watch and see what I said. The reason I said that is because as I went through the number, it was strong. I found very little weakness. The weakest part was mortgage brokers, lost 2,000 jobs. Yes, wages were down a little. They missed expectations. They were 0.2 lower than last month, but they were up. Wages were up, right? Unemployment rate, 3.7 versus 3.5. The labor force participation popped. Now, I haven't gone and done the math yet to see if that's a one-off or not. It's probably not. But some of that higher unemployment rate is because the labor force participation rate went off. Some of it, probably not all of it. So I looked at this number and I said, this is a strong jobs number. How does this slow the Fed down? Interesting, because you look at the CME Fed Watch tool, which I look at almost every day as we're approaching a Fed meeting. And this is close enough, right? This is Friday. What's the date today? September 2nd?
2nd, yeah.
So this will be released on the 4th, 5th, whichever Monday is. It'll be released on the 5th. So on the 5th, you guys should be starting to look at that Fed watch tool. After the close on Thursday, it was 74% probability of a 75 basis point rate hike. Before the number on Friday, it was a 70% chance. Immediately after the number, 68, went down to 62, went back up to 68. And I think it's back in the 70s. I don't know.
56 right now.
It's 56.
56? Oh,
Yeah,
wow.
it's dropped big time.
Because of the stock market crack at the end of the day, people, kind of that flight to quality that were buying rate stuff, right?
Yeah, because we've had a decent rally, a bounce back move in the 10-year. So yields have pulled back in.
Where are equities right now? I've just been on the L.
That shocks
We got the S&P's down 150 basis points right now. The Nasdaq's down 200 going into the
We're
close.
still open right now, just so everybody knows.
We're down
we got
200 basis points in the Nas.
Yeah, dude. See, I didn't even know. The 10 years 20 right
We got walloped. Yeah.
There's a 320. So again, this is like, so that juxtaposition confuses me a little bit. And I got to look more into it. But so the 10-year and the 30-year, they're acting like inflation is going to be under control or there's going to be a slowdown. Now, obviously, it's not one or the other like that, but that's just kind of the general way that I look at it, is that in this current climate, and Jimmy, you can correct me if I'm not right on this, but in this current climate, when you start to look 10 years out, it's either inflation is stronger, inflation is weaker, right? So then you look at, okay, what's driving that? When I see the 10-year go down like that, I initially expect that the market believes the Fed is going to do their job and it's going to work. They might be pricing in a slowdown again.
So you're now saying when you see the 10-year go down, you mean yields go down, right?
I'm talking about yields. Yeah, the 10-year
right.
yield.
Okay.
Down. I'm sorry.
Then I agree with you 100%. And what's really interesting to me is one thing that we just pointed out is that the stocks got hit somewhat violently today in a turnaround. And we haven't seen much of that relationship where stocks go down and then they start buying bonds and buying out the curve and driving rates lower, because the reason stocks are going down is because rates are going higher. So it's kind of this weird relationship right now. And for you guys who were listening before, we were talking about, Bobby said the market, the number was pretty strong. And I give him that. I agree. I think the key element, the reason I said I thought the stocks would like it, because that wage component of it was down a little bit. But a strong number is bad for equity markets. Everybody knew that going in. I mean, I think it was either Goldman or JP Morgan put it a piece saying they wanted to see, for the equity markets to be strong, a disappointing number to the tune of about 90,000 jobs instead of 315,000 jobs. And that would be the sweet spot that the equity market liked. And I think that that's very, very interesting. I still think they go 75, and I'm still sticking with that they will move to neutral, which is not a pivot. Nobody should ever say it was a pivot. A move to neutral toward the end of September, beginning of October. Where do you think I stand on that, Robert?
So Goldman Sachs put out a piece this week that said 75 in September, and then 75 at the next meeting, and then 50 at the next, and then 25 at the next. I thought that was extreme. I thought that was really extreme. What'd you say, Mikey?
Oh no, I said it. I said yours, Goldman. I'll sell you to that.
From what I'm seeing, Jimmy, your voice is coming through, but your face is frozen. Which it's not frozen in a good position. You look like sleepy and drug out.
Shit.
But hopefully, it's in the podcast like that. That would be great for everybody. Oh, you are choppy, buddy. Are you hardwired in yet or not? Are you still Wi-Fi? And he's gone.
That's an even better look right there.
I'm Wi-Fi.
Oh, God, I hope you didn't come.
Oh shit! Listen, I don't have my
Wi-Fi. I really do. Are you hardwired or are you still Wi-Fi?
No, I'm still. I haven't hardwired yet. I'm going to go to Best Buy tomorrow and get the shit to hardwired in. I'm back though, right?
Yeah, you're back now.
See, I had my Wi-Fi turned off. I was just on the LTE signal. Sorry about that. And sorry if I messed it up.
And you said yours, Goldman, on that prediction by Goldman. Okay, fine.
Yeah.
They're one extreme. In my view, you're the other.
Okay.
Simply because, look, if they don't get inflation under control. You know how you're always fond of saying, and factually so, that technology is deflationary, right?
Yep.
They need to use that stuff. They need to, in my view, okay, I'm a strategist, I'm not an economist. And I've gone on record as I think I told Brian Westbury this. I don't think economics is a science. I think it's one of the philosophies. But from that perspective, I think they need to continue to punch the market in the mouth and knock it out. Because, and I don't, by the way, I don't mean the equity markets, I mean knock out inflation. Because if they pussyfoot around it, then the recession that I still believe is coming with almost certainty because of the length of the time the yield curve's been inverted, is going to drag on, in my opinion. Like knock it out. There's so much strength in the economy now. Look at the jobs number. People that talk about the economy being strong and us not being in a recession, why wouldn't you want them to do everything they can on rates now and then dial it back? When as soon as they start dialing it back, the market will take it really well.
Well, I certainly believe that the Fed thinks exactly the way you are saying right now. That's what I believe too. And I also think Neil Kashkari was like celebrating a significant down move in the equity markets just a couple of days ago, which, by the way, is an enormous removal from any Federal Reserve characteristics we've seen over the last decade, 20 years, probably even. The fact that they knew they want to knock the market down because that's another way of dragging liquidity out of the system. I think it's going to be an interesting ride. Let's get Mike in here and take a look at these markets from a technical standpoint. Michael, and I know sometimes people who click on, this is the first time they've seen. So I like to walk through your process each time, and it helps me too, because sometimes your process is a little bit complicated, but it's fantastic. And I kind of want to know what you're thinking of, how you lay it out. Every morning you get up and what do you do? Go.
Every morning, I just look at all my key levels. The first thing I do is check out I don't do it every day because it doesn't change every day, but I check out things like the weekly, we talked about it last one, the weekly rotation zone, the daily rotation zone, and then my other key harmonic levels to determine, are we tilting with the probabilities towards bullish mode, bearish mode, or neutral mode. So that's pretty much the way I approach every day, every week. Whether it be the market, whether it be the bonds, the financial futures, currencies, or sectors.
Okay, so tell us.
I'm sorry, just because of what Mike just said. Mike, if you can put up a weekly crude oil chart, just a weekly, it'll illustrate why Mike likes
whatever you want.
It'll illustrate very clearly on the weekly why Mike likes to look at the rotation zone on the weekly.
But we need to define rotation zone too, though.
Go ahead, Mike.
Okay, we need to define a couple things. Rotation zone. Rotation zone, I have a 8-period exponential moving average. It's in yellow or orange, however that appears, and the blue is a 21 exponential. We're not here to sit here and buy crosses of the thing or anything else. We're here to look for price action that dips into those areas. When the 8 or the orange line is above the blue line, I am in bullish mode and watching for pullbacks into it. When the 8 is below the blue line, I'm watching for rallies and rollovers into it. So that's just a quick, because I can take any market and come up with a snapshot of what to think in 10, 15 seconds. Beyond that, then I use the other key price action levels and what I call the harmonics, which are essentially 12.5% increments, like a musical scale. And that subdivides key rallies and pullbacks. And then based off of those increments, we can come up with probabilities of continuation or reversal moves.
Okay, so just to reiterate one thing, the yellow line / orange line, that's the 8-day exponential moving average. And that seems to be, that's the leader. If that's above, there's the other one, the 20-day you said?
21.
So if that's above, you think it's somewhat bullish. If that's below, you think it's somewhat bearish, and you're looking for ways to play that.
Yeah, and then I watch for example, Bob said to bring up a crude chart. So we see, and I notice when it does cross, we don't trade crosses, we trade other things that get us in things. But Back in December 21, we switched to bullish mode. All the way until pretty much this July, beginning of July, we were in bullish mode. So you can see anytime we approach the orange line, or if we close below the orange line, approach the blue line, we can watch for entries, and you see the rotations up. Now, since July, we've been watching for short trades. So as you see most recently in the last week, this is a weekly chart, we bounced up right to that blue line area and the prior highs that were set back at the end of July, beginning of August, and reversed down. So we are still, just based off that one quick snapshot, we are in bearish mode still. And then we use patterns and other key things to fine tune our trades. We don't just go, hey, it hit a line, buy it, or it hit a line, sell it. It just gives us a quick macro indication of which side of the boat we should be standing on.
Got it. And then how does the 200-day come into play?
The other ones we use the 50. We use the 50 exponential. Also, so for the short, the 8, the 21, and the 50 are all exponentials because they tested out better. Right. The green is the 50, and then the red is the simple 200. The simple for the 200 tested out better. The 50 and the 200 are used for target areas. So, for example, so that's not considered part of the rotation zone. It's just considered key areas we look for support or resistance. For example, in crude, after it broke down below the rotation zone, it held at the 50 on a closing basis for 3 weeks. It broke below it, and you can see resistance, 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 poking up in the rotation zone, still closing below that resistance. So on a bigger time frame, on an overall macro bearish, if we continue the breakdown at some point, not necessarily in the next few weeks, we will reconnect with the 200, which is the red line. Before that, we'll use other patterns and probabilities.
So right now, based on looking at that, are you, if someone, gun to your head, long-term thesis on crude, you'd say bearish, which an eventual target of whatever that's going to be, the high 60s when that 200-day gets there? Is that the most simple way?
Yeah, and what's interesting is this is where we use patterns on crude. Now, this is where we do additional analysis. We have what qualifies for us as a weekly/monthly double top pattern. All right. The probabilities are around 70% that we should come back down, and the full target on that is roughly about 62, 63 bucks, right where that 200 is. Now, that can take, it's a weekly to monthly pattern, which can literally take 6 months or more to fulfill. But unless that pattern gets invalidated, rallies are to be sold in the longer term context.
Interesting. Okay. So what about then? You want to break it down shorter then?
Yeah, and then I break it down shorter. So my next major target because this 200 can be a long way off. All right. This is a huge pattern. So we could, this might not even hit till next year sometime, especially if we have a more severe recession. However, the intermediate target is about 77.50. So knowing that, then we go down in time frames, and I use the other harmonic tools. So if we break below the mid-August lows, the next intermediate targets, and these are for shorter term trades, more I'd gear them towards swing trades, would be, the target area would be about 83.70 to about 84. The next target below that is 81.70. And then we go to that major 70s, mid 77 target area.
Okay. So those are each a 12.5% increment of what move?
Well, the overall for the large scale, this is where this is the stuff I cover all the time on YouTube. So for the intermediate, the next two minor levels I listed, they're actually from the highs on June 13th to the lows on August 16th. And then we take the percentage moves of this, and actually, sorry about that. They're actually from the highs on July 29th to the lows on August 16th. And we take that range, we take 12% of it and subtract it from the lows on the 16th, and we take 25% of it and subtract it from the lows of the 16th. And that gives us—
So it's an extension. Yeah.
It's an extension, yes.
Right. Okay, good. Bobby, as long as we have you here and crude's right up your alley, do you want to fill in any sort of fundamental thesis of why you think we could break that way, or is there one? I know Mike's going to say it doesn't matter. And by the way, I mostly agree with you, Mike, as I've said a million times. 70% of my trading is technical. I do like a fundamental thesis to bolster things. Bobby, what do you got?
Well, the demand side right now sets up brutal, to be honest. I mean, we're basically, this weekend is the official end of the summer driving season. Doesn't mean the demand tapers off as quickly as that sort of a statement would make it sound, but it is the official end of the summer driving season, which coincides with the end of vacation season. And we've also wound down that sort of revenge travel for the vast majority of the public. Plus, people aren't really, companies are starting to demand people get back in the office, but people are kind of fighting that a little bit. So we don't have that extra demand spark that maybe people thought. Europe, recession, 99.9% sure. UK, recession, 99.9%. UK might be 100%. So those lower demand. And then China, I mean, Chengdu shut down. Chengdu has 21 million people. It's bigger than New York City. Shenzhen, lockdowns again. Dalian, port city, lockdowns again. Less crude demand. And then lastly, I will throw out the couple of bullish cases fundamentally, right? But even those bullish cases, when you see a chart like this on the weekly that Mike showed, and this is the daily representation of it, there is so much going on to the downside. It certainly does not guarantee a down move when you short it. Does not do that. But it is so hard to do all this work to get back above critical technical levels that there has to be a lot of fundamental news. So, for example, Iranian nuclear deal could add more supply, right? And we're tiptoeing toward a deal there. So that's also pressure on it. Iraqi infighting was supposed to reduce Iraqi's production. It didn't. What if it does? Right? What if next month it does? Right. On top of that, you had Abdulaziz bin Salman, who's the Saudi oil minister, say that they could cut depending on how production goes out. We've got an OPEC Plus meeting September 5th. So that could be a cut, right? And then Robert Novak, who's the Russian oil minister, said that Russia is not going to provide energy products to anyone who supports the Western sanctions. Anyone. So what if their energy comes off at the same time that OPEC decides to cut, and at the same time that Iraq's fighting gets worse? You probably spike to about 95, 96. And then again, there's all that technical work that the price action has to do. So It's tough, dude. It's tough.
Yeah, no, I know it's tough too. And I would add too that, we're releasing from the SPR, which, people point fingers saying to me, and I'm sure probably to you too, when they announced releasing the SPR, I was like, it's not going to affect the price very much in a bull market. The winds the tailwinds to crude were great at the time. And then I turned around, and as crude was going down, and a lot of that was market position and some demand destruction, as you said, I'm like, well, now when it's pushing something that's actually moving in that direction, it's totally different. So it's not hypocrisy at all to say that SPR in a downward sloping market may have some significance. You agree with that as well, right?
Yeah. And okay. So I'll tell you that under the funding of the U.S. Treasury, the Department of Energy, and I could pull up the study and tell you who did it, actually did a study of what this particular SPR release did to price, or was expected to do to price at the pump. 18 to 42 cents was the range. Another model said 38 cents. So let's go with the high one. Okay, let's say 42 cents, right? So when the national average for gasoline hit, I think it was 501.5 cents, minus the high, which, what did I say? 48 cents, 42 cents. Mm-hmm. 459.
Either one, let's say 42 cents. Yeah, right. Yeah.
459. That's not low.
No. No.
So this move down we've seen in prices at the pump and in prices in the crude oil, a very small portion of that was SPR. And I just wrote an article for Open Markets about SPR and the refilling of it, which nobody's thinking about. We're at the lowest level of inventories in the Strategic Petroleum Reserve since 1985. The SPR is supposed to be for domestic emergencies, like the embargo of 1974. It should not be about lowering pain for consumers so they vote for a party at the midterms.
Oh my gosh, it's actually embarrassing what we're seeing now, because we're seeing, like, in real time what an energy crisis due to a global conflict looks like. We're seeing that play out, and yet we're still not prepping ourselves for it at all. Quite doing the opposite, actually, which to me is just an embarrassment.
Yeah, and then the last two things I'll throw into that. He's not the first president to use it when there wasn't necessarily domestic emergency, but a lot of them had to do with hurricanes, which I think that's an environmental emergency, but it's borderline as to whether a 50-cent rise in prices at the pump until they can get supplies back up it's not like a war with Saudi Arabia or something, right?
No, right.
I mean, that to me is how I envisioned it to be when they said it, sort of an international or domestic emergency. So there's going to be an artificial buyer in the market, and sometime in the future, it's going to be the U.S. government holding a crude oil when it should be falling more.
Politicians politic. It's what they do. Michael, can we switch? Oh, before we get rid of crude. So if you're looking at like a week to 2 week time frame, what's the trade from this? If you see it bounce up to what level do you think it's a short?
Oh, well, first of all, if, for example, if next week we get close above 89.66 area, we could easily bounce to 93.34. So you can get bullish plays in this. That's right, what's on my chart right now. And then the next target above that would be about 95.30. Anywhere, between that 93.34 to about mid 95, I'd be watching for another short setup to resume the bigger downtrend.
Okay, good. That's what I thought you were going to say, and I like that. Can we switch to stocks?
Sure.
S&Ps? Yeah, let's go S&Ps.
Yep. Little snap back into the cash close. This was an interesting day because we're watching for at least a short-term buy pattern if we closed above the high from the first today, but that was only on a closing basis. We broke above it earlier, and then it got the what we call the shake and bake pattern, and went down and pretty much tested yesterday's lows. That would be the lows from the first. So the bearish patterns, we triggered a major bearish pattern back on the 26th with Powell's speech. It wasn't due to what Powell's speaking. Powell made the market sell off, but the sell off actually triggered a bearish pattern in the S&P, the first and second targets, and within a stone's throw of the third target have already been hit. And some other markets completed the pattern yesterday. So,
okay. So I have a quick question. So yesterday's lows, I did put on somewhat of an options long trade, and I took some of it off at good levels today. But I did it because it was the 0.682 retracement from the top, and it also corresponded with that level from, is that the 25th of July-ish almost? That, like, you have a line there, that blue line.
Yeah,
that's why I bought it there. Does the 682 thing mean a hill of beans to you, or is that just you think it's mumbo jumbo? The retracement.
We used a 62.5% retracement.
Okay.
And are you talking about the fib retracement 61.8?
That's what I meant. Yeah.
Okay. And the reason we use the harmonics, the 62.5, is it actually tested out a few percentage points higher than the 61.8, but it's in the same ballpark. So now that wasn't for the bullish potential trade today. However, you had the key, if you just go off pure price action, if I take a bunch of lines off the chart and we just look, we had the highs back at the end of June. We had the highs at the beginning of July. That was resistance, retested with the lows on the pullback around the 26th of July. And then we bounced off of those yesterday, which gave us a potential short-term buy signal based off what I call a %B pattern, which is a Bollinger Band pattern, for a return to the daily rotation zone, which actually we sort of did today on the break higher and then quickly reversed. So we're not going to get that 2 to 3 day follow through at this point, but this is very key. And since you did bring up that 61.8 level and we use the 62.5, if we close, this is pretty major. This is, let me get you the exact level, because this has been tested very strongly. 38.99. If we get a daily close below 38.99, probability-wise, we should retest 37.28 to somewhere between 37.28 and the lows set on the 16th, 17th of June area.
Give me the number again. Close below what price?
38.99.
Okay, interesting. Because again, so what you're saying is that the level that I identified yesterday, you put some validity to it. That's what it seems like, which is good. So and a close below that, that's where we all hell could break loose, and we test that again. Interesting. And what else you got?
So that's key. I mean, so not only do we know, this is what I like to do is come up with the roadmap. So we have the roadmap to the downside, and then again, I have the targets. If we do break, because anything can happen in September. If we do break below the lows from the 16th, then I'll just give the next targets 35.56 and major target area 34.71 to 3,500.
And what percent is that from the top if we go to that level, that extreme down move? It's probably close to 30%, right?
Well, let's just measure it out real quick. Let's see what that would be. By the way, do not ignore that 35.56 area, because remember we talked about that 200 simple moving average.
That's where it comes in, right?
On the weekly chart. So this would be a 200-week simple moving average, which does hold up for key support resistance, is coming in right above that 35.56 harmonic target. So we could see, if we do break below those June lows, we could see some short-term support in that area. If we get down to those targets, it would be a 26% decline. If we get down to the major next target area, it would be, well, that first target would be a 26.12. The next target would be about a 27.5% decline from the highs.
Okay. Got it. Now, so on a shorter term, and I have a trade that I want you to dissect too. Bobby, you think it's good like that I give the trade here, tell him what my methodology is, and he can tell me if he thinks agrees or not. Okay, good. So here's mine on a shorter term basis. And the methodology is this. It worked for me yesterday that I thought that level of support was good. Today it seemed to hold again. So a trade of 39.70, which is above where we are right now. It's probably about 50 ticks where we're above right now, so it probably won't even happen. But a trade at 39.70, I viewed it as a buy with a target of 41.20 and a stop placed back below 38.75, which, again, that seems to coincide with what you think the stop level should be, somewhere below that close of 38.99. Do you think that trade is a high probability or no?
Well, my key level that was actually on the YouTube stream today was 39.72. So back above that puts me in minorly bullish mode for a retest of today's high. And you said your full target was
41.20.
41.20. My target would be 41.15. Based off a harmonic, although if these levels hold and we can get a 4-hour close above 4,019.25, let me just refine these. We could actually, the targets, let me list them out, because we would trigger a short-term double bottom rallying pattern, which would take us to why can't that one target, which would take us to the first target would be 4,076. The next target would be 4,104, and the final target would be 4,132.
Okay. So the only thing you disagree with is you think my entry point is a little too early. You like 30 above 39.75, correct?
It would be what I consider an aggressive entry. So on an intraday break above there, because I already have that identified as a key level. On an intraday break above there, I can play it, but until I would not play it for a longer term pop until we got a proven close above 4,019.
Got it. Bobby, what commodity you want to look at next or asset?
Copper.
Copper, beautiful.
Okay.
So if we go to, so I don't have a trade this week. Jimmy's got two. If we go to a weekly copper, all right, I thought about buying copper today. I thought about that being my trade. Then I looked at it and I said, the 200 held on a really big down day. I should say a really big down week. I just don't think that means enough. What do you think of copper, Mike? So I didn't do it and I'm not doing it, but what do you think of copper?
Copper's at it's literally went to the key critical level today. If we close below, and I like to be exact on my numbers, 337.6. A close below that, we probability wise test the lows between 321 and the lows from June 15th. As long as this level holds, it would just be for short-term pop rallies with the key resistance coming in about 350 to about 357, 358.
And Bobby, the fundamental thesis here, copper. Were you talking about a long trade or a short trade? I missed that part.
I don't know. I wasn't really looking at it from that perspective. I was just saying I tested a really good level. And I've explained this to you. I shouldn't say I've explained this. I've said this before, that if I see something on a chart, I try to find a fundamental thesis for it. And the only one I could find was China erasing COVID zero.
But are they gonna? This is the most asinine thing I've ever seen. They're not gonna erase COVID zero.
No. So I just said, you know what? There's not enough here for me. I love the level that we touched on, but it's just not enough for me to do a trade. And I couldn't really get it. Like ideally, on a weekly chart, it's a little bit longer of a time frame, so it's a little bit longer of a trade generally. It can still happen in a day, obviously, but you're looking at it probably taking a week or two, maybe longer. From this perspective, I mean, if I got to drop my stop below that early July low for a target of just the top of the rotation zone there, the blue moving average, I can't make it work. So
okay. I gotcha. So I think the fundamental story of copper is fascinating. I think what's going on in China, I cannot come up with any reason to explain what's happening there. It seems like the zero COVID policy is just not just shooting yourself in the foot, but shooting yourself in both feet. I don't know what they're trying, what game they're playing at. Bobby, you have anything to fill in that or no?
The only thing, and something I did not realize, is China completely rejected mRNA vaccines, like completely. They've had contracts to buy them for a long, long time. They just said no, they haven't done it. Now, opinion on vaccines notwithstanding, doesn't matter. It's not what I'm saying. But maybe they believe that they don't have a handle on it. And if it gets out of control, it's going to be way worse than what they're doing. But they've driven themselves into a recession. They did little baby patty cake stimulus over the last 3 weeks, relative to their population and the size of their economy. So actually, I should have asked Emma that last week because she's got a big China brain, but they really did patty cake stimulus. And I really think they're going to do something more aggressive and ease up on the COVID, do like COVID 10 or COVID 20. COVID
I know it.
It's just brutal.
Because it's just not working. I mean,
it's not working at all.
If they had any sort of success with any of these policies, we would have seen it by now. It's completely asinine. And I'm questioning global leadership all over the place. I don't know if you saw my last tweet of the day was like, I'm so tired of going over and calling out policy mistakes over the last 2 years that I'm going to embark on the much, much, much more challenging tact of trying to find something that we agree with. And I think that's going to be really hard because it just
Real
doesn't seem
quick,
like anything's right.
The person I went to lunch with, his name's Tim, lives down here in Naples. He's a fan of the show. He said to me, how does Jimmy have so much time to tweet so much? I'm like, I think he's just really fast.
Yeah. Well, you know how trading is, though. People think it's this exciting, fast-paced world.
Yeah.
Trading is just mostly looking at screens, waiting for something to happen, right? And like I get bored easily, which I think is going to surprise no one. So yeah, I tweet. I like to have some engagement. I think it's a ton of fun, and I have no intention of stopping it.
It's really
what do you
fun.
want? What do you want to look at next?
Your Twitter's into it.
Could I just make one more comment on?
You betcha.
We're sitting right at, also besides this key level, just from harmonics, we're sitting right at that weekly 200. So if we start breaking below those, essentially this week's low, and we should then target, as I said, those lows from July. But if we get a close below those lows from July, that's on a macro 62.5% level. If that happens, if we get a close below those July lows on a weekly basis, we probability-wise favor a return to at least $2.35. So it could get interesting. That's when I will tip very bearish. Right now, I'm pretty much neutral because rallies can be sold, but I'll tip really bearish if we get on the close below those July lows, not just because it was July lows, but because it's sitting at a very strong macro probability.
Right. And that would obviously, from a fundamental standpoint, signify something very, very wrong in the global marketplace, something akin to what we saw 2.5 years ago, which is, I don't even like, that takes all the funny out of the show when we start talking about shit like that. Would you agree? Yeah.
Let's save that.
Let's go to something more fun. What other assets we got? Oh, you were just sitting on natural gas. That's about the least fun trade as well, too. Right?
Well, natty gas. I mean, we have some potential topping patterns in natty gas.
Yeah. Oh, good.
Oh, so I mean, we've already triggered a horribly messy pattern, which first key level I'm watching is a pullback to about 838. The major topping pattern is not to get a daily close below about 757. But right now we could bleed slowly down unless we get a daily close back above 958.
Okay. So that seems like a good thing fundamentally too, because obviously a lot of people suffer when nat gas is where it is. So what's the trade? What's the trade thesis in nat gas?
Bob, do you have a fundamental trade thesis?
Yeah.
Well, I was actually talking about the technical trade thesis, but Bobby, for sure.
Well, let's talk really quick fundamental if we could, because one of the concerns I have with natural gas, and I'm working on an article on that. I don't quite have my opinion sorted out, but I don't see how an energy crisis, we have an energy crisis in Europe, but whether it gets worse or better, if it gets worse, I don't see how it doesn't bleed into here going into the winter. I just don't see it. Especially because Justin Trudeau in Canada has basically said there's never been a business case to ship LNG over to Europe. So it's just going to be on us.
But that's what you mean. That's the fundamental connect the dots is we will begin shipping our LNG to Europe to save them. Right.
So if Mike sees this in a bullish light, I can make fundamental cases. We already shipped some of it, right? And by the way, this is another thing that people get wrong about, like the SPR. People were all up in arms because foreign countries bought like 6 to 8 million of the SPR releases. Well, ever since we got rid of those export restrictions on raw energy like this, when the SPR puts out barrels, it goes to the open market, not to the domestic market, and anyone can bid on it. But what the administration now is trying to do, the Energy Secretary, Granholm, I think her name is, said she's working on legislation that will prevent, so the flip side of what they did with crude oil, right? Obama did that. It was a good move. That will prevent natural gas from being exported. They'll only be able to export it if we have excess for the U.S. consumer.
And so, you agree with this?
Well, no, I don't, because considering that supplies, we're in deficit right now in the U.S. about 337 billion cubic feet in deficit. Stockpiles have been doing better and better, but it's only about 2.16 trillion. But on a weekly basis, we're in deficit every single week from what we drill to what we use, and we're going into the winter. So from that perspective, what's been happening with the excess supplies is because prices were so high in Europe, the LNG refineries were working, just chugging along, doing everything they could to get LNG refined into a liquid to transport to help Europe, not only to help Europe, but to get those big profits in. And I suspect with those big profits, they would maybe build more refineries, maybe ease the sort of global pressure by tapping more natural gas, outside of FDA restrictions. So two things that Granholm's thing will do. Number one, it will be completely anti-free markets. But number two, it'll take capital away from these companies that potentially need capital. Did you guys see the note from the energy department in the state of Maine? They basically said, this is Maine, right? So it's not like it's Texas or Florida, it's Maine. And they basically said, if we don't get enough natural gas, the green movement will halt because you need natural gas to get us to the green movement. They said, if people are cold, they won't go green. Basically.
Okay, and this is something that the people who watch markets like you and I, we know this is absolutely as clear and as stark as a slap in the face. We want to get to green energy. The reason we argue against the pace at what they're trying to do it at is because if you disrupt, it moves the other way. This is, again, like everything we see right now just seems so asinine and so frustrating. And this is another one of those things. You saw what happened in Colorado too, where the utility company took over 22,000 thermostats in people's homes and wouldn't let them do certain things. I assume it was a heat wave, and wouldn't let them air condition their house the way they wanted to. When things like this start to happen, people will start to look for other ways. And this is a very, very bad thing. So I want them to get to their destination. I think the tack that they're taking is stupid. You agree, Bob?
Yeah, no, I agree. I mean, I've been called a climate denier. I've been called right wing, all this stuff. Who doesn't want cleaner air or water?
Damn straight.
Who wants to see a refinery out of their backyard if they don't need to see it, right? The difference, I think, is that I believe there's climate change. I believe humans contribute to it. I don't know if they're the only cause. I doubt it, because things in the world are usually not binary like that. Things are nuanced, but whatever. Let's just assume they do. If humans caused all of this, how much can they correct in time to not have the planet blow up? The first prediction was that the planet was going to have blown up already. I'm not a climate change denier. I don't want people to suffer on the way there unnecessarily. And people are like, well, if you don't do it now, the world's going to burn. Well, okay. I mean, the world will still be here, but it'll be Mad Max. It'll be thunder.
Yes. My daughter's an environmental engineer. She starts for her master's program at Stanford next week, by the way. But her and my niece one time cornered my brother and I said, do you believe in climate change? My answer was that it doesn't matter. I believe in cleaning up the planet starting immediately and trying to find the best path to get there that disrupts markets the least and causes the least amount of trouble. I go to Ducks Unlimited meetings. I don't actually hunt, but I have friends who do. These are the most environmental guys I know, who happen to be on the right also. So anyway, it's a silly discussion. I get it. If they need to push climate's changing, we got to do this now to get people mobilized, which is fine. But I lean towards what the truth and what the actual task at hand is. But hey, let's get back to the technicals real quick. So Michael, it seemed like you had some passion about the natural gas chart. You brought it up. What's the trade on a 1 week, 2 week basis? Is there a trade?
Right now, the trade's for a pullback, and then it's for a potential long trade. So as long as we do not close below 876,
You're above, you meant, right?
Below, where's that? 753. As long as we do not close below 753, then any pullback here is set up for another long trade.
Okay. I got what you're saying. So yeah, so you're saying on the short term, you think it's in negative, but as long as it stays above that, eventually it whips around and goes higher.
Correct. So
Okay.
what I'm watching this with this short-term triggered yucky top pattern, it's not to be aggressively short. It's more to use the key levels to set up for potential long reversals.
So the yucky top pattern, is that a technical term? One. And then Bobby, I noticed you earlier used revenge travel. I want to know, did you make that up? And we have to talk about terms, right? He's gone, isn't he?
He's not in his chair.
He's going to get another drink.
Yeah, I know.
Sorry about that, Bobby. Can we switch over to the euro? Because that's where my trade is too. And I think some of the movements we've seen over the last 2 days in the dollar, over the last couple of days, have been very, very interesting. What duration chart is that?
That is a daily. Let me get to it. There's the weekly. And you can see this is a perfect example of the weekly rotation zone. So shifting bearish back at June of last year, and then rotation down, rotation down, rotation down, rotation. I mean, it just keeps rotating. Now it's getting very long in the tooth, but even on the last pop into that little area in the beginning of August, we popped in the rotation zone and we've ended up rotating down.
Okay. This is frustrating because we didn't have the cameras on before. And I said, the first trade I sent Bobby today in the euro was selling it closer to the kind of the highs of the day, which is where we were at the time. And right as I was about to do the trade, a couple clients came in and we ended up for 45 minutes discussing crap. And then all of a sudden I looked around and the bottom had dropped out of it. So I still think this range holds. So my trade here, and if hopefully Bobby hears it if he's back in his chair, and I want you to know what you think too. So right now it's at 99, spot 9957. Yep. So my trade is to buy the SEP micro euro, and a trade is spot 9970. So 12 ticks above where it is right now, which is obviously not that much in euro land. For a trade back up. What's that?
I need another drink. I hear it.
No, I know. Yeah, I'm with you. Yeah, which I was asking you questions when you were gone, but I think that getting a drink is clearly more important. So buying it at spot 9970 on a stop in trade, 12 ticks above where it is now, with a target of 1.0100, which is still not above this range at all. It's not a breakout. It's just kind of playing a move back into the range and a move higher within the range with a stop placed at spot 9900, which is clearly a violation of the range that's been established over the last few weeks. Thoughts on that, Michael?
I mean, it's just I don't have any problem with range trade as long as you don't start getting a close below 9915.
It's 9915. Yeah,
it's fine. I mean, look, roughly we're just caught in the range. We start breaking down from here. It still favors the lower prices. The key target area is on any rally is 10055.
Okay. And my target is above that. So you think my target is a little ambitious, correct?
I think your target's a little aggressive because if we hit your target, we've pretty much triggered another trade and will probably then rise up to 101.34 to about 101.93.
Okay.
In other words, if you hit your target, you probably shouldn't exit.
Yeah,
exactly.
I'd be rolling it into another long trade.
That's when you roll into options.
Right. Oh, it's funny that you just brought that up about rolling. You guys know, Bobby for sure, 2 out of the last 3 podcasts we've done, I've had trades that were buying the micro 10-year yield contract, the yield basis. First time I bought it was about 295. Second time I bought it was about 306. I had those on, and I forgot that it is a monthly contract, and it settles you up on the last day of the month. So that move yesterday on September 1st, I'm in the chips, baby. And I look and I'm flat. So this is a reminder that and I assume, Bobby, you occasionally make mistakes like this as well, because I want to make sure I'm not the only guy. because I'm like, it had me selling the micros on my statement. I'm like, what the hell? I didn't sell any micros. I mean, my stops were way below. And so it did not roll into the September. So if you trade those micro yield contracts, which are fabulous, I love those micro yield contracts. You got to roll them every month. They are a monthly contract. So that's just a little side note there.
Yeah, it's an interesting thing you put up because I did roll the gold into the December contract. So I'm still short the gold trade that I gave out last week. And maybe Mike, you can look at gold and tell me if I'm nuts for having done that because you weren't here when we did it. But there was so I like the double crosses. And Mike can point that out when he gets his chart set up on the daily. There's a double cross on the daily. And I love getting into trades after a double cross. Now, we didn't move up into the rotation zone, except
Can you explain to the people what you mean with the double cross, Bobby?
Mikey, it's right. It's on the chart there, so Mike can point to it.
When you see, so for example, a double cross would be the daily rotation zone crossing up and crossing down. What that means, you take a look in the higher context, is generally a corrective move within the weekly basis, means it returns to the weekly rotation zone. And so on the daily, we saw that double cross. The secondary cross is just an indication that, yes, we are resuming the trend down. And if you look at gold, it rallied up into the weekly rotation zone, smack dab to the end, and then we got on a daily the reversal cross and came back down to test the lows from mid-July.
Okay, so I did something last week a little premature. If you go back to the daily, Mike, I drew a best fit trend line on that move up right around that second cross down and ended up getting short. And again, we talked about this on the podcast last week, but excuse me, I just ate the cherry from my drink. I ended up getting short at about 1750. Okay, because I was able to draw a best fit trend line there, and it had already broken the trend line and the rotation zone was widening. It was slightly premature. You know where I'm talking about on that best fit, Mike, from about like August 22nd on right there. Yeah. So I drew a best fit upsloping trend line. We had broken through it by the time I already did it. Looking back at the weekly chart, I said, you know what, I can get the risk reward right on here. So I went ahead and shorted it at 1750. So my target on this is 1611. And, you can't do these aggressive trades without minis and micros. So that was also that I wanted to bring that up because, trading from 1750 to 1611 in the big gold contract is a lot for people.
Yeah. And I want to underscore that point you just made too. I mean, I know some big ass traders who have huge deep pockets and use a bunch of the standard contract and could have $100,000 swings, but that's not who we're talking to here. We're talking about people who are traders to make some income. And if you start putting on things that evoke enormous emotion as you're losing, then it's silly to do. I love trading the micros because I'm just looking to make, some money during the day, be consistent and not have something that's going to keep me up at night. So way to underscore that point, Bobby. Appreciate it.
So Mike, what do you think about the gold trade I'm still in? I see you pulled up the weekly and I'm kind of upset already. Go ahead. Target is 1611, Mike. Go ahead.
Your target's 1611.
Yeah.
If we got let me pull off so we can see it clear. If you look at this level with around the weekly 200 coming in about 1675, where I also have a pretty key level. You got 1, 2, 3, 4, 5. We're closing in on 6 bottoms there. So if that level breaks, you're hitting 1611. My target's 1562. It's a new short trade. So
I'm looking at my chart here right now, and as I glanced at the weekly 200 there, so where does that come in? And I'm looking at my daily gold chart, and I have a horizontal line right at 1678.40. And I suspect I drew that line because I looked at the weekly and I said, 1611, there's a lot of work to do for 1611. So, and I go back and sure enough, that 1678 line that I drew is right around where the 200 is. To put it
into clear terms for the viewers, that's massive support. It's going to have a hard time chewing through it. That's what both you guys are saying.
Well, it's
right?
also been down. Yeah, it's also been down there twice or 3 times, though, 4 times. And the more it goes down there, the more it weakens. But I'm not able to defend my target right now. I'm just not.
And if it does close below there, it's like, all right, my target just wouldn't be 1611. My target is
it might start at 0.
Sold. Right?
No, it's going like it's 1578 to 1565 is the next target area. That's actually a nice short trade. And I got to favor the short side unless the only thing that will shift me besides a little mini buy pattern, which would be just be on a little 2 to 3 up day move. I need to get a major close, and I'm talking daily or weekly close back above 1824.60 before I can get aggressively longer term bullish. Other than that, rallies are to be sold unless we get that close above that 1864 level.
Yeah,
I've learned that the hard way.
My stop's 1830, so it's very easy to see where I got that on the daily chart. If you
look at our harmonics,
flat area.
At this point, any short trade, my stop would be 1777. Why 1777? If you get a daily close above 1777, we probability wise should retest that 1809 to that 1824 area. So would I want to be short? No. So that was my key stop area on any short trades.
And again, I put my target at 1830, so I'm above all of that. But again, my target's awfully aggressive. It's funny because from a perspective of this is probably one of those situations. I'm not sure, but probably one of those situations where I felt so strongly about my fundamental thesis and I saw a technical trigger that I may have said, yeah, this is, I have a clear short setup. But the world is effed and we're probably going a lot lower. So I picked like a random retracement or GAN level or something and put that 1611 in there. I'm not going to say I'm immune to that. I'm not.
No, so why this is all a process. We're trying to iron out the creases that we have. Bobby, as long as we're getting to the end of this now, I wanted to tell you something real quick is that, that video we had of Emma, which was so funny that you posted as like the teaser for the last one. So I showed it to my wife and we're sitting at the dinner table and she goes, wait a second, that's Bobby Acino? Yeah. She goes, well, you said he was like your tech guy and your producer and was good at that stuff. I expected like a nerdy guy. He looks like some Guido thug who's 2 months out of prison. And I go, well, that's the look I think he's going for. So not only would that not be an insult, but I think that's what he's shooting for.
What's funny about her saying that is this is a background, right? That's not a real brick wall. So I just bought it off Amazon because my wife was like, I can't keep hiding when I got to come behind you and go into the file cabinets and this, that. So I put it in front of the file cabinets in the office, blocked the rest of the room out. One of the producers, TD Ameritrade, I go, she's a blast. And I go to get on the show and I'm like, yeah, sounds good. She's like, all right, shot looks good. She goes, really? A brick wall? I go, I don't know. It was on Amazon. It was like $20. She goes, that's really on brand for you. I was like,
it's perfect. Yeah. Because deals are made in alleys and that's where brick walls are. Money is collected in alleys. Brick walls are there.
Yeah, but you've got to admit, I'm the nicest guy to never have punched you.
That is quite true. And there's when you have a mouth like mine, you tend to take a lot of shots. And I know that's not going to surprise you. I've had a couple nose surgeries.
Not at all.
Yeah. All right, Michael, do you have any closing words?
No, we covered a lot of stuff. It's going to be an interesting month. So next time I'm on early October, we'll have September out of the way. So we'll have a lot more clarification with things.
Actually, Mike, I'm bumping you, just so you know. I'll talk to you about it offline. You're getting bumped.
Oh. Okay.
All right. Well, we'll talk another time.
You're going to be on the 28th
of October?
Oh.
Yeah.
Seems like your feelings are hurt. Is that true, Michael, or no? Okay.
Actually,
All right.
they'll probably, I think that puts you at 2 weeks in a row. So we might just delete one, but whatever. I got a very special guest that asked for your slot. So.
All right.
So I'm not back
Okay,
till like November?
I want you on October 28th, but then that would put you like a couple days later as well. You'd be on the very next week, which is fine with me.
All right.
Just
I'm gonna
let
go.
me know.
So you guys have a great weekend, okay?
See you, Jimmy.
Yeah.
You know what? Maybe we'll do one extra show. That's what we'll
Yeah,
do.
it's fine.
All right.
Fine with me. I like these shows.
We'll do one on the 27th, and then I'll bump you on the 28th.
Have a good weekend, boys.
See you,
All
Jimmy.
right, thanks.